Welcome back. In this section, we're going to be talking about the Fibonacci tool. Right, what is a Fibonacci tool? This is a tool that is used to determine certain price points that you're going to be expecting price to either retrace to or to expand to, right? So it basically gives you a forecast on price areas where you're going to be expecting to enter into trades, and once you have entered into that trade, it gives you where you should expect markets to trade to. That means targets, you see. So the Fibonacci tool, you can either get it from insert, right? You come to objects, then you go to Fibonacci, right? Mainly we use the one written titled Fibonacci retracement. That's the main Fibonacci tool that is widely used. There are different types of Fibonacci tools, so it will come down to you as a person, like which one do you use and for whichever case. So you can either go to insert objects, then you select Fib and then Fibonacci retracement, or you can use the shortcut, the one on the toolbar. You see, this is the quickest way. You click and then you draw your Fib tool, right? Fibonacci tool, shortcut name Fib tools. So now you can see it's not visible because the color is not in contrast with the background, so we need to edit the colors. So how do we edit? Remember, you right click on the indicator, same way you edit on the horizontal line or the vertical line or the shape and all that. You go to properties, right? The red, we're just gonna leave it as red. We come to levels. Levels, you can see it's yellow. We're gonna choose black because of black and the background of white is gonna be clear. Now you can see we've got our Fib tool nicely illustrated on the chart. We've got the 0 level, we've got the 23.6%, we've got the 38.2%, all the way to 161%. But now these are the default retracement. These are the default retracement levels. Now how then do we edit these levels? We right click, right? Once you have right click, you go to properties. On the levels tab, right? On the levels tab, you're gonna see all the levels that are illustrated here. They are also here. So you can practically delete the ones that you don't need. So for instance, I'm gonna delete the 50, I'll leave it there. The 61, I'll leave it there. Let me add the 70.5. So you type 0.705, right? So that's our 70.5%, right? And then here you're gonna write 70.5. Then you click OK. Sorry, it's not displayed there. There's something which I didn't do right. 0.61. Right, the description, we need to write 70.5. right, we've got the 60%. Right, you can see now I've got the 70.5 retracement level. So now once you have added the levels that you personally use, for me these are the levels that are on my chart, you can even specify to see the price of the retracement level that you are talking about. Say for instance the 70.5 retracement level. When you want to see what price is that in relation to your price on the vertical side there, you go right click, then you go to properties, right? Once you're there, you go to levels But now on the description, you see on the description, if you want the price before or after, that's up to you. For now, we're gonna put the price point before the retracement level. So how do you do that? You put percent and dollar sign, right? I'm gonna put space there, so this is 50%, right? So what this does, this percent dollar sign, it's gonna pinpoint the price of USD/JPY at 70.5% retracement level on the swing price point that I would have drawn. So now let me do that with the rest of the levels. So we've got 61.8%, then we've got the 100% dollar sign, we've got the 100% here, right? Then we've got the 161% dollar sign, space, then we place our, okay, let me just put on the 70 point just to save time, right? And you can change the thickness here to make it bigger, right? Then we click OK. Now can you see what that does? It picks up the price point that's coming in at, say, 50%, right? 50% of this swing that I have drawn is coming in at 108.001. So now how then do you use the fib? Now that we have customized our fib, we can go on, we close it. It's not going to change, it will stay like that. Once you have done that, how then do you use the fib tool, right? In most cases, I advise people to use the fib tool from a higher time frame, right? And the fib tool is used mainly to determine your entry point and your exit points, right? So now we had a market, for instance, on the USD/JPY, market has been moving in a downtrend, in a bearish structure from this high to this low. But prior to that, we had a swing from a swing high to a swing low, market retraced, swing high formed again, then we had another swing low here, right? Then we've got another swing high formed here, then market formed another swing low. So now for class illustration, I'm gonna click on my fib from this high to this low. Say I would have noted this downtrend when it was formed, before this happened. So from this high to this low, right? Then I'm gonna extend my fib tool, right? You see now that I have extended, but still I'm monitoring just this high to this low. You can see price retraced all the way to 50%. Now, what if I don't want my fib to just end like on the chart? I want them to extend all the way, right? I'm gonna right click, go to properties, then I'm going to levels, parameters. I'm gonna click where it says ray to the right, right? Then I'm gonna click OK. You see what that does? It puts all my levels to the extreme right, such that when I adjust here with my chart shift, right, if I shift my chart to the left, I can clearly see where I'll be anticipating the market to either go to for me to trade to the downside, since market is in a down momentum, you see. So that's how you use the fib tool. Let me open a different chart and try to explain again on how you use it. Let me open USD/JPY, Euro USD, sorry. So this is Euro USD. We had a swing high formed here, and we have got this swing low, right? So I'm gonna grab my fib tool from this high to this low. Can you see the opportunities that it gave? It gave you good opportunity here, just above the 61%, 62% retracement. You see how the market rejected and then went to the downside. So this would have been your entry to the downside. You see, same applies here. You see the same structure, this high to this low. Market has been moving in a downtrend, so this high to this low. You see why this high? Because there was a low that was formed here, so this is a new lower high. So this high to this low, it offered you one, first chance, short the market. Two, second chance to short the market. Because remember, the 61, the 62% and the 70.5%, they offer better opportunities to trade the market in the direction that the market is moving. For instance, here we've got a downtrend structure, so you'll be anticipating to short the asset. So that's how you use the Fib tool. You see, for those who are not aggressive with the market, they're gonna use this high and this low, you see, such that the moment they see price coming back around 1.092, you see, they'll be looking to short the market, of which you can already see there's confluence here. We've got a base, and a base, for those who haven't taken the institutional supply and demand course, you might need to, for you to understand this. So there's a base here, of which market will definitely offer good opportunities to the downside. There's a couple of pips that you can get here, short trades of like 40-50 pips before the market probably continue with its uptrend. So that's how you use the Fib tool, and that's how you add other levels to the Fibonacci tool. In the next class, I'm going to show you briefly how to set up your time frames. I'll see you in the next class. Thank you.